Hello and welcome to everybody. Today I have a guest on, and he's from the YouTube channel Invest with Darren, and I've been following his YouTube channel for quite a bit, and I'll leave the link in the bottom. And he's a very nice fella, and I'm really appreciate him agreeing to do the podcast. And so you're very welcome to the channel, Darren. And
Thanks a million, Des.
invested in the stock market yourself.
Yeah, so I think it started the year before COVID, so whenever that was, 2019 or something like that, I think around then. And it was just when I was about a year into kind of full-time employment, I guess, and a little bit of money that I wanted to see how I could make it work a little bit harder for me. So yeah, I really found when I was trying to research specifically for Ireland, there was very limited options at the time in terms of, first of all, what means you could invest through, like a broker or an app or anything. There was very limited options there. And the ones that I did find, just a random one like Davy Investing or something, it was a lot of high fees. Like you could pay up to like €50 just to deposit any amount of money. So so I thought it was quite limiting in that. So I just started on Revolut. That was the one that literally just came out at the time. They allowed investing there. So yeah, about 2019, I dabbled very, very small amounts, but I'd say 2019, I started a little bit on the Revolut investing.
Very good, very good. Well, it was during COVID lockdown in 2020 when like we all had a lot of time on our hands, and then I started. There was the ads for Trading 212 and eToro and that kind of thing. So I opened up a demo account with Trading 212 and eToro, and I decided to go with eToro then. But I demo traded for quite a while, 6 to 8 months, and I put in money for a little while. Then I kind of got nervous, took it out again and that kind of thing. And I did more research and that kind of thing. And I also did two Udemy courses, one on Forex and one on the stock market. But I decided to go to the stock market and a bit of crypto instead. That was my preferred option. So yeah, it's very interesting. And like you said, it's very limited, Darren, in Ireland. But, I find it very interesting. I only invest small amounts. I buy and hold and keep it for a certain amount of time. And I don't know about you. I don't use leverage anymore. I used to use leverage before and I got burned.
No, I think one thing you learn as well, and I try to advise against this in whatever videos I do, that, try not to get bought into too good to be true things. Like, trading, for example, if you're trading with leverage, for example, you can earn a lot of money, but you can also lose a lot of money as well. So kind of just be very cautious with things. And yeah, as you said, I'm more of a buy stocks, hold them, maybe sell them if you want to cash in some profit, if you're lucky enough to do that. But I wouldn't be really of the mindset of short-term trading, because especially if you're trading like by the hour or something, especially like in the Forex markets, it's a little bit like gambling in my terms, I guess, unless you really, really know what you're doing. And even then, it's still quite a big element of risk in it. But yeah, like I think also Forex is a bit of a bad rap for having a lot of kind of scammers involved, because I think it's one of them things where it's very accessible. It looks like you can make big gains, but people also don't realize the downside risk they're involved there, especially if you're trading with leverage, as you mentioned. But yeah, no, for me, stay away from all that. It's literally just find some stock that I like, buy the stocks, invest in them, research them, and kind of be patient. And a little bit boring, unfortunately, but that's how you'll make money in the long term.
Yeah, but like that as well. When I started off, I was using leverage and I was trying the day trading thing, and it was up, down, and it was, you're one step forward and two steps back. So,
Exactly.
You can kind of find yourself obsessing then over charts and that any bit of spare time you have. And then I said, like, you're a lot more relaxed when you're just buy it, hold, and like you said, sell if you feel like selling, hold, and set your stop loss, etc. But like, I think that's the sensible way to handle it after a while anyway, definitely.
Yeah, I mean, like for us as well, that have assume other full-time jobs as well. It's not our main thing. I think to add that extra element of the day trading on top of it, where you're like literally hour by hour, minute by minute kind of thing, like kind of consuming yourself and then having a lot of highs and lows and stuff. Personally, for me, it's not worth it at all. So I think it's nice to be involved in the investing space, but it doesn't have to be all consuming. It can be, tip away at it, be patient, be consistent, that kind of thing.
Yeah, I completely agree, Darren. Like we all have busy lives outside of it and everything, and like it's for me, it's just a few hundred in two different accounts, Giro and eToro, and I check them every couple of days, and then just to kind of read up on stuff to have information for the channel and that kind of thing. Like that's the main thing.
Exactly.
Like I remember hearing someone saying before, if you ever heard this saying, if your trading or investing account keeps you awake at night, you have too much in it.
Definitely, it's true. Like and I find that happens a lot, specifically, not even so much with amounts, but like stocks that you put your money into. So it all depends what you put your money into. Like if you put a lot of money into the S&P 500, you're probably going to be able to sleep at night no matter what happens. But if you find this new stock and you put like all your portfolio into it, or you put a lot of your portfolio into this one stock and you haven't done much research, you've literally, it's such an unknown for you. Like, so obviously you're going to be having trouble sleeping at night if you don't know what you're investing in. So that's another thing. Like it, as I said, don't get caught up with too good to be true, or even the likes of myself and yourself. It's fine for us to give a little bit of research on stocks and stuff, but people should take it upon themselves to look at some other sources, do their own research on top of that as well, because that's only our opinions at the end of the day, and they should have their own informed opinion before investing in anything.
Yeah, because like the 2 courses I took on Udemy now, I found them great, like because they warned me of the dangers of everything. And then like I was in a Discord community for a number of months, but after a while then you kind of say, look, you have to kind of stand on your own 2 feet. You do the courses to learn, but then you have to apply what you learn. And then you have to kind of, Discord community is all right for a while, but you know, you don't need your hand held forever in the stock market either. You know, that kind of way, like,
it's definitely, as you said, it makes sense to have a bit of be a bit informed going into it, but like, as with anything, you learn by doing, and a bit of trial and error is absolutely no harm to, as you said, start off with small amounts, even that demo account on Trading 212, just so you get an idea of how things actually work and you can understand just what companies and what kind of investor you want to be, I guess.
It's funny the way I do it. Like I never actually opened up a full account, a money account with Trading 212. I have the demo account, but I opened up with the eToro and DeGiro, and I've been sticking with those 2 now the last while. Like the difference with eToro, you can buy fractional shares, but actually DeGiro, you can't. You have to buy whole shares of companies, you know. So that's the difference with them 2, you know. So like it's good to have the option of demo trading, but with DeGiro you don't. You have to kind of sign up, and then that's the only way you get to know the platform is when you've actually put money in. So you know,
the only bad thing I suppose about demo trading is there's no risk involved, if you get me. So you make decisions a lot more freely, I guess, compared to if it was your own money. So you know, you could risk, I don't know, 50% of your portfolio on one trade and it wins. You're like, this is easy kind of thing, but you never actually do that in real life. So there's that to be wary of with the demo accounts too. But I think generally for jumping into investing, you like put a small amount of money in, do trial and error, try out a couple of different brokers. Don't just tie yourself down to one, because they all have different features and stuff, and ones that may actually really align with how you want to invest. Like Trading 212, for example, I'm not going to make this a big promo or anything, but one of the features on it that I like is the pies, because it basically allows you to put, I can't remember the exact amount you can have in, I think it could be up to 100 stocks in a pie, and split them all on a percentage. So then if I want to invest €100, I could literally do that with one click of a button, and it splits it out into all of the different stocks that I have the weightings at. So that just makes it simple for me. But if you want to invest in just an ETF, maybe that platform isn't the best for you. You like a different platform that does it. So you try different ones out. That would be my kind of advice there.
Yeah, that'd be exactly mine as well. Like, as I said, like I was using a broker that it was CFD trading only, and I had got €400 in it. And like you had an account manager on that, and when I was talking to him on the phone, and I said, is there a way of not using leverage? He said, we're a CFD broker only. And I kind of said, like, leverage on a small account, Darren, and all stocks being leveraged, say 1:6, 1:10. It's not great. You know, I wouldn't agree with it. Like, I wouldn't go with it again, you know.
No. And yeah, I'd say, like, personally, just not a fan of trading. I understand you can make money from it and all. I just think anything to do with trading is just, it's not for me. There's too much risk involved for me. Yeah. I just like to buy the actual stock, own the actual stock, not be worried about. There's a lot of fees involved in the CFD trading as well. Like every time you buy and you sell something, there's fees that add up there too. So.
And one thing I noticed as well, say if you're buying American stocks, then you have the fluctuations between the euro and the dollar, and what was up one day, it might be down the next day, and that's another thing to take into account when if you're trying day trading as well. But like that as well, I do a bit of crypto, you know, I've Bitcoin, Ethereum, them kind of things, but only small amounts, because you know, like they run 24/7. There could be a lot can go on during the night when you're in bed with the crypto. You have no control over, like, so.
Definitely, that's one. I am a fan of crypto as well. I don't have any at the minute, but I'll be looking to add back to my portfolio in the coming months. But for me, I'm gonna basically just buy and hold again. I think I'm gonna split it into mainly Bitcoin, mainly Ethereum, and then have like 20% of that portfolio, of the crypto portfolio, in a couple of other altcoins, because they're the biggest risk, but you can also get some of the biggest gains there too. But I'm not going to be looking at candles. I'm not going to be looking at charts, because, as you said, it's 24/7. You'll never get a break from it. So not for me.
Exactly. Like one thing, the crypto, like as you said, there can be big gains, but there can be also, like I saw in the news there where one guy, he lost what, 10 grand in Bitcoin. Like, people are putting in too much. They're, with the hype and that kind of thing. Like, they haven't done the research. They don't realize just how volatile, especially the crypto world is, before they.
Yeah, especially for like, especially in Ireland, I guess there's a lot of people who we'll say kind of novices at investing, because it's relatively new for I guess our whole population, unless you were super rich. Like, I mean, if you 10, 15 years ago, if you ask people, have you ever bought a stock? They probably say no. But if you ask your friend now, they probably did somehow on Trading 2 and 2, Revolut or something. They've had exposure. And I think it is a little bit damaging at the start when we had like AMC and GameStop, them stocks that people obviously knew what the companies were, cinema and game store, whatever, but they didn't understand what was actually going on in terms of why the price of these were going up so high in that short squeeze. And people just thought you could literally put any money in and just get massively rich off it. And now they think that's the same case for every single stock. So I think a lot of people actually have been put off investing since that whole ordeal, because by the time it gets to mainstream media news and everything, people have already made their money. You're coming in behind, you're basically chasing that. And it doesn't always work out, and it didn't work out for a lot of people. So people are like, they invested, they're like, lost money, I'm not doing that again, staying away from it. So I think some people had a bad introduction to investing, especially over the last kind of 2 or 3 years. But I think we'll heal from that as a population and as an investing community, and just realize that, like, I've heard people say like investing shouldn't be sexy, as they say, in terms of like it shouldn't be something that's like, oh, amazing, like I'm investing or something. It should be literally like pretty boring in terms of not trying to get people to not watch our content or anything, but it should be relatively boring in terms of, you pick your company, you put the money in, but you're not checking it the next day and you've doubled your money or anything. Like, it's slow increments. You have to give it time. It could be up, it could be down, but over the course of 3, 4, 5 years, you'd hope you'd see some kind of average gain there. And sure, you can win big, of course, as well, if you pick the right companies, but that's more kind of, I suppose, the gambling side of things, where you're hoping to just put 10 extra money in the space of a short amount of time. So yeah, it should be a little bit more kind of I wouldn't use the word boring again, but more kind of like just consistent, persistent patience. That's kind of the 3 things I would describe it as.
Yeah, and I remember a quote, I don't have it here in front of me now, I might get it wrong, but it was Warren Buffett. And he said the stock market is an instrument that takes from the impatient and gives to the patient, or something along those lines. And it was fucking bang on.
100%. 100%. Yeah, because the people who are selling their stock when it is down, the people who are patient are buying that same stock then at them lower prices. So that's how the money's shifting there. So, but again, it's with time. Like, it's definitely an emotional kind of a psychological game, investing, because as you said, like, you put some money into stocks yourself, and I've done the same, that maybe you weren't fully confident in, and it drops down, and then you just end up selling it all, locking in your losses, and that's when the money is lost, when you actually lock in the sale. So
yeah, like I do always set a stop loss and everything, and then you kind of you set an amount. Like, with me, it's just €10, $10. Like, I put in 200 or whatever, and like what I find, some people used to say, set your stop loss 1 to 2%, 3%. But you have to allow volatility. They were all hitting the stop loss when I did it that much. If you put a 10% stop loss, at least you have time. It can fluctuate, and it will like eventually swing around.
It could drop 8% and then shoot up 20% if we're talking about in the context of trading. Yeah. Like, so you need to allow that bit to drop down. Do you mainly do trading, Declan, or is it more just kind of individual stocks that you buy?
Yeah, I'll tell you. I actually have. I have here. I've a share in Bank of America. That's with the Giro. I bought that about 6 months ago. That was down initially. That's up about €4 now. I bought Heineken there about 2 months ago. Just have a European and an American one, and just eat takeaway. I have that a while as well. They're all the ones on the Giro, and then eToro. They're a different mix. They're McDonald's and Ethereum. That's what I have in the
the 2 kingpins.
But what do you call it? Ethereum was down about €2.26 last night. I checked it, but as I said, I only invest, say, 100, 200 or whatever. I set my stop loss. There's no leverage. There's no wild fluctuations then, and you can, you can rest about it. That's just my take on it, Darren.
Yeah.
And yourself with the pies, I know Tesla is one, and they have their earnings next week, buddy. They have their earnings on Wednesday the 24th, Q1 2024. So you'll be watching out for that.
I definitely will, and I'm pretty confident in Tesla as a company overall. Like, even in terms of like checking up on them constantly, like, I feel like there's a lot of there's a lot of kind of hate towards them by certain communities, and especially like the journalists I find are very bad, because like a lot of my friends know I invest in Tesla, and I'd often get articles of let's say the Wall Street Journal or something talking about Elon Musk or talking about Tesla having to recall 2 million vehicles. But if you actually read the article, it's just it's over the air software update. I mean, like that's not an issue, but people are putting these articles out there to try to like, look, Tesla are in huge trouble. And I was talking to someone recently, and they were like, is Tesla profitable yet? And I was like, yeah, they are. And they're like, they're not. And I was like, no, they are. They've been profitable for about 3 years. And they're like, no way. And I was like, they are. I mean, people just have this thing in their head that they're a real struggling company and they're just a flash in the pan kind of thing. But personally, I think they've set themselves up very well for success. And even let's say, Declan, they missed their earnings report here now and the stock drops 10%. They're still executing on their business plan as far as I'm concerned. So that would be an opportunity for me to add more money on these dips. And I think I said in my latest video that, or maybe I haven't even released this video yet. I was just editing it yesterday. But when I buy stocks, I generally, now of course I make the odd few mistakes or ones that I haven't done enough research in. But generally, when I buy stocks, I would say, if this stock drops 10%, but the fundamentals haven't changed, why wouldn't I buy more? Would I buy more? If I wouldn't, I don't buy it at all. If I would, absolutely. So if Tesla drops 10% now, for example, when their earnings come out, and nothing has changed, Elon Musk is still in place, their business plan is still the same, I will add more money to Tesla in that case. I'm not going to sell it because that makes no sense. That's the way I can maximize my gains, is by buying on the dips.
Yeah, exactly. And like, you know, you read different articles like myself, and there can be a load of different conflicting things. Some saying stock is going to go down, others saying, and you know, you see a lot of other YouTubers say this is going to go 10x to the moon. I think that's unfair on new people because they kind of believe that. Like, and sure, no one has a crystal ball. No one knows. When you put your money in the stock market, that's why you're setting a stop loss, because it'll go either up or it'll go down. You know,
even people who say like, you know, this is going to be a good year or whatever, or like, there's literally, if you knew that, you wouldn't be here making videos, shall we say, if you knew exactly what the stock market was going to do. Same for we won't get into housing now, but same for housing. You know, people are like, I'm going to wait to buy till there's a crash and all. You could be waiting for 10 years. You know, people don't know what's going to happen in these things. And
exactly, doing very well. So you know,
like to be honest, the way I started was when I was younger, I had a gaming YouTube channel, so kind of like Call of Duty and stuff like that, and I had about 30,000 subscribers when I finished it, but I was only like 16 or something like that. So that's where I had the experience of the kind of video editing, the thumbnails and stuff. So when I got interested in investing and realized that there wasn't many people in the space for Ireland, because obviously it's quite a different landscape investing in Ireland opposed to America and UK, for example, I was like, I have the skills to make videos. I like investing, so I might as well just go for it. So yeah, it started off so well, to be honest, like especially with TikTok, a lot of organic growth there. And then for the first year, like did really, really well. The last year, I've kind of taken the foot off the gas, to be honest, because as you know yourself, sometimes you just get burnt out. And I suppose in investing as well, there's only so much you can say in terms of, you know, technically I could make maybe one video outline all the principles of investing and leave it at that. But it's kind of how you can keep it interesting for people and come at it from new angles. It can be hard to keep coming up with ideas constantly, but I think that's where chats like this come in. This is a new perspective. This is from people's experiences in it. So this is obviously very useful too.
And like you did the podcast with Ryan, I did one with Sean and that. And like we are social animals, and it is nice to have a chat with someone. You know yourself, making videos in your room or your home office, whatever, on your own. It can be tedious enough at times. They don't see all the tricky bits where your mic is not working. And like myself, I plugged in the GoPro to the computer this morning, and that won't work. I felt like throwing it out the window. So I'm just using
all the hidden struggles. All
the hidden struggles, yeah, exactly. Yeah. But no, it's a bit of crack. I never thought I'd do it. I was wanting to, because I kind of admired different people that did YouTube for years, like, you know, and I didn't think I'd get the guts to do it. I remember being so nervous doing the first video. And then I said, if I do one video, I'll be grand. And then now I don't feel right if I haven't put up at least one, you know, it's just 2 or 3 minutes and then a short after, you know, a week or so. Like, you know, it's funny how it
honestly changes. Yeah, I'd even feel like, you know, if I've had even this last year, like a month and a half go by where I haven't uploaded a video, and it'd be at the back of your mind kind of thing. You'd be like, I don't feel right until I get something out there kind of thing. So but it is great. And as you said, like once you do 1 or 2, they may not be great at the start, but at least you put yourself out there. And what is there to lose, really? You know, maybe somebody will laugh at you, maybe this or that, but who cares? Just do your own thing kind of thing.
Well, I'm 40. I've just turned 44 in November. I've developed a thick skin, so they can laugh at But you know, like when I started off, I had an older laptop, and there was a guy, I was a Facebook group, and I just asked him to critique the video. I knew it myself, but like the lag was horrendous. If you see my other videos, I'm going back and over like this when I'm talking. But I got a new laptop. It's crystal clear. And then when I plug in the GoPro, it's even better again. So, the analytics are doing much better. But the only thing is, what I know, I don't know about you, Darren, but they're pushing out the YouTube shorts a lot more than the long form content, I find, the last while.
Yeah, I think they're trying to push them. So it's definitely an opportunity for some growth. Like, for example, if you put up like a long form video, it may not do well, but if you put up a short of the same thing, there's much more chance it might get double, triple the views. The only thing with shorts is that it's hard for the retention. I think a lot of people are like scrolling through, whereas with YouTube, they intentionally click on your video. If you get me, if with long form content, like they want to watch your video, that's why they've clicked it. Whereas the shorts, you have a couple of seconds to impress there. You may get a lot of views, but you may not hold the viewers for that long or get the subscription. So it's definitely an interesting space and something I need to do a bit more on the shorts, to be quite honest. But it is a good feature.
And you know what I find I've been doing lately now, Darren, and you can kind of monitor the analytics on this as well. You remix your long form content into shorts, your own content, snippets out your own one. And it's very good the way to do it, because it links to your long form video. And when I do the short, I can see then that the long form video from 5 or 6 months ago has got about 10, 20 views. So it gets a bit of momentum going on your old videos as well, which I'm hoping to do as well. So
yeah, I'll check that out.
And what I find, like some people are saying, I know you're probably doing the right thing. It's invest with Darren. I've, done 1 or 2 travel vlogs and all that. A lot of people say that hurts the channel, that you have to stick to the one niche.
I think 100%. Even on my gaming channel, for example, like it was mainly Call of Duty videos. Then I might do like a vlog or something back in the day. It definitely hurts it. I think the reason is because when people come to your channel, they expect to see a certain type of content. So I think if you are going to do vlogs or anything, maybe keep that on a separate channel, because I think it does hurt ultimately, because then you'll get a split audience on your channel. You have people who like the Declan investing videos, and you have people who like the vlogs. And that means whenever you put up an investing video, you get half the views, and then you get the other half in the vlog, for example. So it's not an ideal way to go.
It took me a good while to cop onto that fact.
Look, I mean, it's trial and error.
We finally got together and did it. And check out, it's Invest with Darren is Darren's YouTube channel. And he did a podcast with Ryan Williams. I watched there lately. He did it about 2 years ago. That's brilliant. I'll link that in the description as well. And do follow his channel and follow mine as well.
Yeah, definitely. Thanks, Declan, for bringing me on. I really do enjoy these kind of chats, and we'll definitely do something again in the future for sure.
Yeah, and I if you have me on your own channel sometime, I'd be more than happy to do it. And as I said, I really appreciate you taking the time out, Darren. You didn't have to do it, but you're a gentleman, and thanks a million. I really appreciate it, buddy.
Yeah, my pleasure, Declan.
Okay, we'll end it there, and thanks for watching, guys, and thanks again, Darren. I really appreciate it. Keep in touch, my friend.
No worries. Yeah, will do. Thanks, everyone.
Bye-bye. Bye-bye.